Good morning, happy Monday, happy new trading week, and welcome to Market Wake Up. My name's Jordan, this is John. It's just gone 8:30 a.m. British Standard Time. We're going to get you up to date with everything that's happening in macro world. And today I'm going to share with you a big bite, which is an actionable trade idea back in the currency world. I know it's been a little while since I've discussed that, but Aussie dollar is going to be my focus today. So stay tuned. Let's get into Market Wake Up. And he's made it back into the office. John, welcome back, my friend. How you doing?
Yeah, I'm not happy about it, mate. I must admit, I'm really not happy about it. I woke up today, it's dark outside, it's raining. I'm quite glad that I haven't had to step outside to actually go anywhere. So yeah, I've got the holiday blues bad. When I was waking up and it was blue skies and sunshine, you're just happier. I can see why everybody else is happier in the world rather than anyone in England. You know, I'd hate to be in a place that's just dark all the time. You know, I don't know how people do that, but yeah, I've got holiday blues bad. I'm hoping the markets can boost me, give me some energy today, and I'm looking forward to your analysis on the Australian dollar. So yeah, let's see how that. Let's see what happens there.
Wow, this is
putting you on the spot for that one. But other than that, I'm good, mate. How are you?
No, I'm good. It's good to have you back. I won't touch on anything weather orientated. You never kick a man while he's down. I also know that half of our audience, if not more, are British. So by kicking you, I've just been kicking everyone in chat as well. And I don't want to do that. I don't want to explain why Australia is better. But good morning to Paul, Andrew, Musclay, Russell as well as popped in. Already talking on the Aussie dollar this morning in chat. I absolutely love that. Guys, I cannot stress this enough. We do this live so you can communicate with us. Now, I know we spitball a lot of information. Sometimes we just like to rant about what we're seeing in the markets. And I know you guys like to listen, but I really do want to encourage you guys to get involved, say hello, give us a wave, ask us what we're thinking about, ask us questions on the topics. I did actually see fantastic comment on a stream the other day talking about someone playing around with season axe. I want to say it was Andrew, but I'm scared. I might get that wrong, and I'm terrified of getting that wrong. But guys, the comments, the love, everything, keep it coming. It really, really strives to make us to make better content, but also to make sure that you guys are enjoying it. And I am looking forward today. Let's get into market leftovers. There wasn't any markets open yesterday, so in terms of what we're going to be looking for leftovers, I'm going to go out and say slim pickings. I think there's a few things major that's changed in the macro world. One in particular is obviously this Middle Eastern conflict. It's gotten a little bit bigger over the weekend. They're quite impressed at how quickly the IDF just removed everyone in charge of Hezbollah, might I add. I'm not a pro-war person. I don't want to sit too much talking about war, but definitely impressed. They've also gone into Yemen now as well after the Houthi rebels. So poking the bear, so to speak, everyone looking at Iran saying, what you're going to do. I think I haven't looked into the oil markets, but I think they're going to start pricing in this uncertainty now. When it was Hezbollah and Israel, it was kind of like, yeah, this is expected. I think just how quickly things have changed there. I think the oil market would be right in starting to price that in. I actually haven't looked at the oil market, but I think that would be a smart investor decision to start pricing in some larger scale conflicts. Let's get the dark stuff out of the way. Get it, gone. Woof, see you later. Chinese manufacturing PMI beat expectations today, which I was very impressed with. Paul, hello to you, and good morning from Potato as well. I hope you're having a fantastic day. But yeah, Chinese manufacturing PMI beat manufacturing expectations. I believe it was forecasted to come in at 49.1, and it come in at like 49.3 or even 49.8. Someone correct me there. 49.3? No, 49.8. You lied to me. It's 49.8. Forecasted to come in at 49.1, coming in at 49.8, which is just fantastic, really. For
depends what report you're looking at. If you're looking at the Caxton report, Jordan, it's 49.3.
I'm not looking at the Jackson report.
Oh, okay.
I'm looking at
you're taking China's data as is then. So
I'm taking their word on it. I am.
Okay.
Name one time that they've lied to us, John.
Let me let me think.
Yeah, okay. The Jackson's at 49.3. It depends on what you want to do, but yeah, some good news coming out of China this morning. There's just been a chain reaction off of that news, but I'm not going to touch too much on it in market leftovers because it's part of my analysis for the big bite. So I don't want to dive too much into there. Getting back into the office, John, looking across the charts, looking across your fundamental analysis, anything that's sparked some surprise for you coming back from a week off?
Not necessarily a surprise, but obviously there's the China data is going to start dominating the market. I think, with all this stimulus that's coming in, I think obviously Russell's touched on it in his question as well. Are we going to see the sort of headwinds now from this stimulus flowing into sort of the Chinese stock market? Is that then going to have a narrative with correlating sort of markets? Are we going to see that reflected in the Australian dollar, for instance? Are we going to have a look at how the commodity market's pricing in? I think, if China's starting to do well, we can look at sort of, your copper, your steel, things like that. So I'm quite interested in that market at the moment. I'm having a look at how maybe I can try and get myself exposed to it. Obviously, the obvious place would be looking at the sort of overall Chinese stock market. You could have a look at maybe like the Hang Seng, for instance, as a market to get involved with. Do I want too much exposure? This is the thing to this. It could be seen as a significant risk at the moment, because obviously injecting loads of stimulus could also be reflected in sort of a bad light, right? Why are they injecting lots of this stimulus? Because they need it. Why? Because the economy is not doing great. Housing situation is really poor. Developers have been going down X, Y, and Z. So I wouldn't say it's surprising. Well, it was surprising last week, really, because they haven't really been too vocal in stimulus packages in the past, but now they've just kind of lumped loads in. So that was kind of surprising. So I'm kind of looking into that. I'm kind of trying to see where sort of value is at the moment, right? I think that's what macro helps to do. It's where's the value in kind of what markets are trading. Usually our value is found in sort of, if interest rate differentials, GDP differentials, things like that, in order to go trade currency markets. So for me, I'm trying to find where that value is at the moment. I think one of the markets that I'm quite interested in is the pound. I think I like the pound. I also like the Swiss franc as well. The Swiss franc we've spoken about sort of last week and covered it in a couple of topics, but they're now getting to a little bit of a point where they're going to struggle where they can take interest rates to get that stimulus right. So, and I think we'll talk about this in a big bite, maybe going into tomorrow. I don't want to take up too much time ranting, but to answer your question in short, nothing too surprising, but yeah, I like the Swiss franc going on in China in terms of where opportunities can be found.
Good, because today I'm going to present you with an opportunity on how to expose yourself to it in a nice way, because I feel the exact same way. A nice way is in you don't want to overexpose yourself to the situation because it's very volatile. Well, I'm going to show you how to do that in the big bite. That's actually exactly what I'm leading into, which is fantastic. Barry, good morning to you. On Friday, John mentioned a correlation between copper and New Zealand dollar Swiss franc. Where does it tell you the correlation, and how can you use the fact it has one? You can find the correlation by researching bluntly. I think a lot of the correlations,
really easy way to do it. Well, for me, because obviously we use external software and stuff. So if you actually go to, I'll use Markets Made Clear. So when a chart's there, they've got a really handy correlation tool underneath, and it will show you like the top 5 correlating markets with that asset. So basically, I was looking at copper due to the fact that China was doing the stimulus, and I thought that copper would perform pretty well from that. So underneath that, it was just basically saying there was certain assets that were correlating with it. One of those was a really strong correlation on Euro Aussie and Kiwi Swiss.
What I'm hearing there is John's lazy, and he just presented something another platform gave him. That's what I heard. So I've been doing it the nitty-gritty way. I've been sitting here going through, making sure everything's correlating, having a look at the percentage correlations, and John's just out here going, yeah, I've got a tool.
Well, it's done the work for you. You have to then research.
Well,
let's be fair. You do have to then research it. I had to go and make sure that it wasn't a seasonal that was like there for 3 days. I had to go and see if it was actually something that was correlating over a longer period of time. So yeah, there's a little bit of work in it, Jordan.
I'm only winding you up. It's Monday morning. This is your first meeting of the week, John. I get to make that first impression of how good this work's going to be. RS popped in, said work smart. Yep, I agree. I agree. He has work smart. Let's get into Freshly Squeezed. Let's have a look at what prices are doing now and what we have to expect later today. Some interesting, actually, pieces that we need to expect later today. I'm going to touch on that momentarily, but first, let's get through the prices. I'm not in my usual spot, so prices are going to look a little bit different. VIX uptick 17 today. A bit of strength out there. This, I actually do believe this has come out of the good news out of China, which was quite a surprise. A lot of people have been betting on that Chinese stimulus package and investing in there. So to find some good news, I think it's going to be very, very interesting to see where it goes. Let's get into commodities to begin with us. Coffee up 1.7%, oil down 0.2%, gold pretty much flat, silver down 0.35%, sugar down 0.6%, trading at a 22.28 level. Aussie dollars up 0.5%, the euro is up 0.05%, the pound is up 0.14%, US dollar Japanese yen pretty much unchanged, US dollar CAD pretty much unchanged, US dollar Swiss franc up 0.25%. Crypto, you're looking at Bitcoin down 1.6% and Ethereum down 0.79%. So seeing a bit of volatility when it comes down into the cryptocurrencies there and not the direction that you want it. I don't have the futures markets of the indices up just because I'm on the wrong charts. So if anyone wants to give me an update on what the S&P 500, I'm going to take a swing and say it's down pre-market, just because of the way I'm seeing VIX react there. Am I right?
No, it's up.
You... Well, there you go.
0.19%.
0.19. Okay, margin.
So
that's right. Really I'll cop that. But there's a correlation coefficient gauge in TradingView. Yes, there is. There is a correlation, but I find it a little misleading sometimes. So just be careful when we're playing with that. Just the way that it's visually represented can make you think something that's not actually happening. So that's really important to know if you are using that. But guys, welcome into Market Wake Up. If you haven't already, make sure you like that button and consider subscribing. We're in Freshly Squeezed, and I've been lazy. I forgot to upload the banner, but I want to talk about two things that are coming out later this afternoon. Okay, actually three. German CPI is going to come out, I think, on the hour we end German CPI, which is going to be very volatile for the euro. Okay, that's important to note. Later today, we've got Jerome Powell and Lagarde speaking. So that's two central bank leaders going to do a bit of a speech. That's the European Central Bank and the US Central Bank. They're both going to have a little chat. They're going to do a press conference. They're going to talk about future monetary policy. Probably will generate some kind of volatility in and around the market. The one I wanted to focus on today is the Chicago PMI. Chicago PMI is coming out this afternoon, which is a producer managers index. It's where they survey in and around 200 to 300 purchasing managers, and they just get an idea on how they feel about general economic climate, right? How they feel about their jobs going, how much work they're getting, how easy it is to negotiate deals, et cetera, et cetera. It gives people a really good indication of what's going on in and around Chicago and how the business stature really works. What's really interesting about this is the same as any other PMI. 50, above 50, it's market growth. Below 50, market contraction. If you subscribe directly to the surveyors, I can't remember their website, you get the data 3 minutes early. I'm not, this is economic data. You get it 3 minutes earlier before it goes out free to the rest of the market. So if you're ever in and around trading, this is just for the Chicago PMI. If you're ever trading around that Chicago PMI, please note, you will see increased volatility approximately 3 minutes before it's actually released, because they just sell it. They just I don't think I can say the word that I want to, but they just love the money and they just sell the data before, right?
Really,
so Yeah, sure. We'll go with greedy. But yeah, just keep an eye on that. Chicago PMI is going to give you a bit of an understanding on the ground sentiment in the US there, especially for people who are in control of a decent amount of money, who are purchasing managers. But it will be a delayed release just because, because you're just not in the favorable position, to put it bluntly. You're German CPI. German CPI out today. What are your thoughts? We put out a little survey. It's in the chat right now. How do you think the German CPI data will impact the euro US dollar? 76% last time I checked said, I'm not sure. John, I want you to give them an answer.
I would agree. No, yeah, it's gonna. Yeah, I'm looking at German CPI. So, obviously, there's certain reports that we need to kind of be aware of when we're looking at overall economic health, right? You want to look at for me anyway, I look at sort of the three biggies, right? Your GDP, your interest rates, and your sort of inflation rates and whatnot. And obviously German CPI is quite big in Europe. Obviously it's sort of the biggest economy within that Eurozone, so it's super important. That's why it's got the little red folder next to it. But essentially last month's CPI report came in lower. So they're looking to see if this gets a little bit of a boost here. Now, for me, the Eurozone sort of growth has not been fantastic, right? And, you know, a lot of people have been looking at how this will sort of impact the euro in terms of longevity, right? So macro is more kind of mid to long term, right? When you look at sort of what's been playing out in the overall bigger trends. I don't see where euro's getting its value from across a lot of assets, to be honest. Obviously, against the dollar, it's really clear. It's the fact that the Fed are cutting rates. They're cutting rates aggressively. ECB have already done that, right? So, if anything, the Fed's lagging behind on the rate cut cycle, so which is actually unusual. It used to be the fact that the Fed would go first and everyone else would follow, whereas now we've got a different time, right? So that's why we're seeing this huge upside in euro dollar. So obviously reactions is going to be what's happening today. If you're trading lower time frames, if the reaction comes in and the CPI has grown in Germany, then you're probably going to see a little bit of a swing higher in euro dollar prices, probably heading to those 112s. It's what follows sort of after that. Or what your kind of grand scheme of thing with the euro is. My grand scheme of the euro is they're not in a great place. They've not been in a great place. They actually cut really aggressively in their previous meeting. So I think they're trying to obviously induce some stimulus within the market. Is that going to have a good effect on the euro in the mid to long term? I don't think so. And then when I look at sort of one biggie for me at the moment is the GDP differential between the US and Europe. Obviously, that came US's GDP was a lot higher than anticipated, so it was in that sort of 3% mark. Yes.
Let me be really rude.
Be rude.
Get back to German CPI.
Right. Okay. I go off topic too much.
We're comparing the euro and the US dollar, which I like because that's what we're talking about. But yeah, specifically for German CPI today, what are we feeling?
Well, for me, I think if we get the sort of continuation of the downside, then it kind of reaffirms my thoughts on what's going on in the eurozone. If we start to see an increase in CPI there, I think obviously it's classed as better for the currency, right?
Yeah, okay. But do you think it will be? Do you because this is an interesting scenario, right? Because for years, like the past 20 years, CPI coming in hotter has been classed as good news. It's only the last 3 years that we've gone, oh boy, it's come in too hot. Are you starting to see CPI printing positive as back to a positive?
No.
Because you're right, they cut heavy.
Yeah, no.
So CPI should be expected, right? CPI upticks.
Yeah, but I don't feel like this is. To be honest, I think this is a nothing report. I don't think we're gonna.
Okay.
I don't really see this is going to change the thoughts of what's going on in the Eurozone right now. I think you've got to look more at what's going on in the manufacturing side of Germany, which is very, very, very poor, right?
Yeah, really bad.
They essentially... So, essentially, you want to see lower CPI, right?
Yep.
If you're a consumer.
At the moment.
Yeah. If you're a consumer as well, right? Now, usually... if you're getting lower prices as a consumer, it means the costs of purchasing for businesses is lower, right? So they've got more sort of, they're able to lower those prices for the consumer, which is good. But does that necessarily mean that they're bringing in more economically? Are they bringing in more money? You know, I don't think it's going to help right now. I'm looking more at what's going on in the manufacturing side. You know, I haven't looked into sort of what's going on in terms of the big players in Germany, like Volkswagen and things like that. I haven't looked at stock prices recently, so I kind of need to familiarize myself with that a little bit to see how they're performing. But usually when you see sort of German car makers doing okay, then Europe's doing okay or Germany's doing okay.
That's the thing, right? Because the numbers coming out of the car makers aren't pretty. The conditions aren't pretty. The DAX is running like just vertical. It's running. I'm just like, it's going back to that. What's good, but regardless.
Yeah, I've got a long way about talking about CPI because my thoughts around Europe, because I've been doing a lot of research into the Eurozone recently, and my thoughts are very weighted to Eurozone is in the shits. So you know what I mean. So
I like it. Anyway, let's move into Australian dollar, the big bite. Let's change the tone. Let's get serious. Welcome to the big bite. This is the segment where we give you our best analysis for the day. Something that we take incredibly... Actually, I'm going to say I'm actually proud of the work that we do in the big bite. I really am, because I like sitting around doing the numbers. I had someone come tap me on the shoulder the other day because they were looking at the charts that I had on the laptop, and they were just like, "What are you doing?" And I was just like, "You don't want to know. You really don't. Like, this is going to be a loophole for you."
Watch the market wake up 8:30.
No, it was leave me alone. Stop talking to me. No, the big bite today. Russell's already kind of tapped on it already. Okay, he popped in and said pinning strength against weakness, going long the Aussie dollar against the US dollar. It has been working well. How much is gold and the China liquidity injection supporting this move? And I want to add to that. Now, the question is a question which requires an answer, and I don't think it necessarily has the answer. Is it affecting those prices? Absolutely. Is the US dollar also kind of doing its own thing at the moment? Absolutely. So there's a little bit we've got to weigh there. But I'm going to talk seasonals. I'm going to talk seasonals on a chart that you can't get access to. I'm going to talk seasonals where you have to go back and you have to really dig to find it, to the point I don't even have something visual to share with you, John.
Whoa.
I know.
Okay.
We're talking...
Interesting where we go with this.
Iron ore. We're talking iron ore.
Oh, yeah. Okay. Yeah. I kind of touched
on it.
Which
is... Yeah, hard to get to, right? Now, this, I actually, through diving into this, realized that your copper push, which has also been mentioned in the chat today, actually backs this theory up, which is fantastic. But essentially, between the dates of October and December, this is where China's manufacturing usually gets through the roof, right? This is where they really get involved. This is where they really, really start to ramp up production. Interesting, it just happens to coincide with where we just had a beat today on their manufacturing PMI. That's premature. It's their next month that I'm actually looking to, but the fact that we've done that premature is still good in my eyes, okay? If you guys didn't know, one of the biggest things that they use in production, one of many, copper, steel included, is iron ore. Australia just happens to be the producer of iron ore. Specifically for China, we produce iron ore like there is no tomorrow. Specifically, the city I am currently in, it's ridiculous how much iron ore we actually produce. What this usually does is create severe amount of demand for iron ore. Now, Australia and the smart producers that they are, like every global economy, they say China will sell you the iron ore, but in turn, you have to buy it in Australian dollars. That creates demand for the Australian dollar. So if you couldn't put that together, my play here is the Australian dollar long. Now, recently we have seen a lot of strength. Today, the Chinese manufacturing PMI has rocketed the Aussie dollar. It has. So traders are looking at the same thing. That's a good sign. We've pushed through the 69 level, which we've struggled to get through for a little while now. You can see us testing it back in 2023. We really did struggle to get through. We've managed to get through. The next level I see of major resistance is at 70. That gives us a whopping, I don't know, what, 600 pips? 600 pips before we get up there. And I think there's a lot of money to be made in Aussie dollar longs. Now, when looking for some more conviction on this, not just the fact that I like the idea the iron ore prices are going to go up between October and December, and that means it's going to buy the Aussie dollar, we start looking at seasonals, jumped over to Seasonax to look at specifically on Australian dollar, US dollar. And you can see 75% win rate over 24 years, October into early November. Now, you can look at this more prolonged and look from the beginning of October into late December, which coincides perfectly with that iron ore play. But if you want to be a little bit more impatient, you want to take your profits a little sooner, you can look towards early November here, which is, you can get out with this play here. You can get out before the election, and that's one thing that I like about it. This seasonal play.
Do you think the election's going to have a big swing on? Well, obviously, it'll have a big swing on Aussie US dollar.
No. I think it's a risk event I don't want to be involved in. So this allows us to get out way before then the election can go do whatever it wants to do. Doesn't affect me. I don't care. See you later. I'm out of my position. I've got my profits in if I've got my profits, right? Yeah. But this is a seasonal play here. This is adding conviction to already my idea. This isn't the idea. This is just adding to that iron ore play that moves 75% over 24 years. Fantastic. A couple of things I don't like, a couple of risks, a couple of headlight warnings, right? Warning signs. When this idea has been wrong, it's been wrong in a big way. It's not just been a little bit wrong. It's to put it in a more Australian way, it's shit the bed. Right. It's not pretty. It's not pretty when it has gone wrong. So we need severe risk management, and we need to make sure that we are on the ball with this. Iron ore is already moving higher. Okay, Chinese manufacturing is already printing higher before this period. I like that. Okay, iron ore's been getting stumped for like 6 months, so I think we're at a low where we can start taking it higher, which is another thing I like. Technically, we're up above that 69. We've got nothing pushing until the 70. Aussie dollar long, I like. US dollar, I'm a little bit worried about. We could pin it against something else, but for the sake of the message today, I'm thinking Aussie dollar, US dollar into that 70 level before the beginning of November. There's my big bite.
I like that a lot. It goes hand in hand very well with what's going on in sort of what's happening in China, which is something.
Here, let me add this. Your copper play, I found out iron and copper have a huge correlation. Not surprised, really, but they're a huge correlation. So yes, everything that's happening in China adds to this. The stimulus is obviously going to increase business. It's going to make it easier to get money. We are going to actually be able to, the businesses are going to be able to spend more, lend more, get more, buy that iron from Australia. Australian dollar find a bit of strength. Chat. Let me know what you think. Is it easy to follow, first and foremost? Tell me about my presentation style. Were you able to follow? If you have any questions, send them in or rate the analysis. What do we think? Do we think Aussie dollar will get to 70 before November? John, what do you reckon?
Yeah, I like it. I think if I was going to expose myself anywhere, it would be obviously what I kind of said in a technical term earlier about the euro, would be definitely somewhere to go and have a little look at that. I just kind of bought the chart up here of Euro Aussie at the moment. We're definitely in that sort of bearish phase right now. We broke the 50 MA on a daily chart, and since then we haven't really looked back. Prices just continue to sort of move lower. We are heading to a little bit of a sort of demand zone down through towards that one spot 684s, but I like this market lower. I think this is a market that I really want to get on the sort of back of. I just had a little quick analysis of the 4-hour chart. You know, where do I see me wanting to get in on these kind of positions, and for me, I always try and look at kind of short in near sort of areas of resistance where sellers have come back in the past, or areas of kind of short-term volume. So towards this kind of 1.62 area would be somewhere I would like to kind of get on the back of for maybe a continued short. There's a bit of a bigger demand zone around 159.50 as well, which we could try and target on any kind of moves. But I think any kind of rallies here on Euro Aussie would be quite nice to have a look at getting exposed to. So yeah, that's where I would go for take it to go. There you go. There's a trading special for you today. Take it to go special for you. A little bit of added on to your end of your analysis there, but that makes a ton of sense to me. And that's a good thing. That's one thing that we can use with macro, right? You don't just have to look at Australian dollar, right? You can go look at what impacts the Australian dollar. How is that performing? You know, then I mentioned it earlier. If you go and have a look at sort of Europe's biggest sort of car manufacturers, you can get an idea of what's going to happen in the euro and things like that.
Yeah, I agree. Last little touch on Barry said, yep, he's all in. That's alarming. Please make sure you read the disclaimer when we start the video. I know you only have £10, but I still don't want you going all in. Good morning, Mind Over Markets as well. If you guys haven't seen Mind Over Markets, head over there and click the subscribe button. Rich popped in. If the Swiss National Bank is looking to weaken the Swiss franc and Aussie dollar Swiss franc is already around its lows, would this make a good candidate? I'd argue, is the Swiss National Bank looking to weaken the Swiss franc, or are they sitting neutral? That's my only argument with that, but I like the way you're thinking. I like the way you're thinking. Yeah, let's talk on it tomorrow. Andrew, since it just broke resistance, I would like to retest before going long in Aussie dollar play. I've given you the fundamental play. It's up to you to execute on the technicals, Andrew. That's called partnership. Market wake up done. Another day. Excellent presentation, Richard. Thank you very much, guys. If you did enjoy, make sure you hit the like button, subscribe, and turn that notification bell on. We'll be back tomorrow, 8:30 a.m. British Standard Time, to do it all again, where John's going to talk about the Swiss National Bank. I look forward to it. Cheers, John.
See you later.